Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Tuesday the 28th of May 2019. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Okay, let's kick off with a look at the overnight changes and price moves to be aware of. A relatively quiet session over the last 24 hours. As far as foreign exchange markets are concerned, what we have seen is a pullback in the euro. The euro trading down by 0.12% against the US dollar in yesterday's session. Of course, the UK was out of the markets yesterday for a bank holiday. European markets and most of the rest of the world were in. However, Australia and the Aussie dollar fighting back, up by 0.13% against the US currency overnight, bringing the weekly gains for the Aussie to plus 0.62% versus the greenback. So back on the front foot, back at 69 as well. 70 still obviously a big target for the Aussie dollar. I don't know if we'll get there in the near term, but that's where the market would probably like to try and push towards. The Chinese yuan on the back foot against the US currency, down by 0.17%. Against the US dollar to trade at 691.8790 shortly before we recorded the video. Elsewhere, dollar index for its part, beginning the week on a positive note, up by 0.20%. And so, can we see the dollar firm further? Can it get back across some big fear lines and press on in this current macro climate? Elsewhere, the dollar stamping its authority again over the South African rand, with the rand weakening by 0.25%. To trade at 14.4479 against the US dollar. If we just have a look at the cryptocurrencies, the daily moves don't really tell the whole story. I think we need to look at the weekly moves to see that Bitcoin had another very strong weekend, testing towards that key $9,000 mark over the weekend. Can that resurgence in the cryptocurrencies continue across this week? That's also something to keep a close eye on, I would suggest. Okay then, what's on the calendar? Events that may move the markets today. A pretty busy calendar, although relatively light on high impact data today, it must be said. To come at 05:45 GMT, we will have Swiss gross domestic product data, both quarter on quarter and year on year for Q1 2019. That'll be followed at 6 AM GMT by some import price index data for April out of Germany, both month on month and year on year. And at the same time, GfK Consumer Confidence Survey is released for the month of June. So a chance to see how German consumers are faring there. Then at 0600 hours GMT as well, we're back in Switzerland for balance of trade data from the country for the month of April. At 06:45 we hop over the border from Switzerland and into France for consumer confidence from French consumers for the month of May. And then at 8 AM GMT we're hopping over the Alps once more to Italy for trade balance data, non-EU trade balance data this from Italy for the month of April. At the same time, across the Eurozone, we'll have an update on private lending data for the month of April, and also a look at the M3, a broad measure of the Eurozone's money supply data there for the month of April, both year over year and for the 3 months to April. At 08:30, we're back in the UK for the British Bankers mortgage approvals for the month of April, the number of mortgages granted here in the UK during the month of April. And we'll also have across the day the ongoing inflation report hearings from Parliament. The Bank of England, they're reporting to a committee of MPs on where they see inflation heading in the UK. At 9 AM we're back in Europe for consumer confidence, services sentiment, business climate, economic sentiment indicators and industrial confidence for the month of May. So a top-down, bottom-up look at both business and consumer confidence across the EU for the month of May. And then we pause for 4 hours till 1300 GMT when we cross over the Atlantic for the S&P Case-Shiller home price indices data on a year-over-year basis for the month of March, and that's followed an hour later at 1400 by US consumer confidence data. At 14:30 we'll have the Dallas Fed Manufacturing Index for May, a regional Fed activity index, one of those that's always closely followed in the US, and then during the afternoon we'll have 3 and 6 month T-bill auctions as well as a 5-year note auction out of the USA. We pause then until 2100 this evening, crossing over the Pacific for the Reserve Bank of New Zealand's Financial Stability Report, a chance to see how the RBNZ feels about its local economy and the financial services industry. And then at 23:01 we hop back to the UK for the British Retail Consortium Shop Price Index data for the month of May. Okay then, overnight comment that's caught my eye. And first of all, markets are still digesting the results of the European elections, which show strong gains for nationalist parties in the UK, France and Italy. Meanwhile, in Greece, there is to be a snap general election after a poor showing in the European elections for the ruling Syriza party. So shenanigans continue in Greece. Staying with politics, EU leaders will gather in Brussels today for the first round of discussions about who will be nominated for the top jobs in the EU's institutions, and I believe there are 28 roles up for grabs here, so the horse trading will begin. These are early and preliminary rounds. Nonetheless, I'm sure there'll be some deals to be done, and that'll be a story to watch going forward. And staying with politics again, but crossing back to the UK Home Secretary Syed Javid is the latest contender to throw his hat into the ring for the Tory leadership contest. As many as 9 candidates could now stand for the first round election, although some of those may be persuaded to drop out if they don't gather enough support. But that's how big the field is for the moment. Okay then, food for thought and something to take away with you into the trading day and beyond. And why not think about this? A study of freight volumes and shipments in the US suggests that the economy there is growing more slowly than the headline GDP figures portray. Now you'll remember that we saw headline GDP for the first quarter of 2019 up above 3%, around 3.2%. But the CAS Information Systems Group have been tracking freight volumes and freight shipments in the US and using that as an indicator to shed some light on what the real rates of growth may be in the US economy. As we can see, freight shipments have been trending down and lower still through the early part of 2019. Here in a different chart we can see the US GDP percentage change in orange against shipments, freight shipments in blue bars, and both these indices measured quarterly. But as you can see here, there's a proper divergence now emanating between a sharp decline in freight volumes and the rise in US GDP. CAS have subtracted higher inventories and slowing imports and exports and suggests that the real rate of growth for Q1 2019 GDP could be as low as just 1.5%. So divergence between some old-fashioned measures, shall we say, and of what's going on in the economy. Transportation, of course, has always been a big component of technical analysis for many, and here it's being used in a different way to perhaps suggest that the US economy is slowing down. Okay, please do take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks, please do contact your Pepperstone account representative and do take the time, as I suggest, to read this risk warning thoroughly. Thank you for your time today.